Apple getting a vote of confidence from a pair of analysts this week. Goldman Sachs initiating a buy rating on the tech giant and setting a 12-month price target of $199. Meanwhile, Wedbush Securities' Dan Ives upping his 12-month price target from $180 to $190 while maintaining a buy rating. Now, this has helped spark a Wall Street rally for Apple, with shares up noticeably this week. As you can see, they're up more than 5%. Yahoo Finance tech editor Dan Howley joins us now. So, Dan, why are these firms so optimistic about Apple?
Yeah, Rochelle, it's really interesting. The Goldman note obviously coming out, putting a buy rating on Apple and that 199 price target. This is the first time in years that Goldman has done that. So they're initiating their coverage again. And then the Wedbush rating here with the $190 price target up from $180. And the big to-do seemingly has to do with services. Over at Goldman, the thesis really is that Apple has the chance to turn services into a much larger business. They have that kind of flywheel effect. I know that's kind of a thing that everybody talks about, but that they're able to draw in consumers. They're still getting switchers, surprisingly. That's something that the Goldman note also points out, that they're getting people from Android over to iOS in advanced markets or more saturated markets, while still looking for the opportunity to grow in more emerging markets, at least in the smartphone space, especially when it comes to places like India and the like. And that really is the next big market. But as far as services go, they do see Apple's ability to keep people coming back, to get them to push more into more services, Apple TV Plus, Apple Fitness Plus, Apple Music Plus, iCloud Plus, things along those lines. And that's really going to help generate continued growth going forward. And then on the Wedbush side of things, it's that, as well as Apple's ability to build out the iPhone kind of growth strategy, despite the fact that they had that slowdown in Q1. The lockdowns are over in China, so they're able to get more devices out the door. And so we're looking at potentially the iPhone 15. It's an anniversary edition, really. And so that could be a big device for the company itself. And then, oh yeah, there's that headset that everybody's talking about that is expected to come at some point this spring during its Worldwide Developers Conference. We'll have to see what the result is from that. But it does look like, a lot of kind of bright, sunny outlook for Apple, at least from these two analysts.
And Dan, you mentioned India there. Apple shaking up its international operation and putting a bigger focus on India. Tell us more about that.
Yeah, they really want to start to build out more of their devices in those regions and also open up their own stores there. That's something that's been rumored for a while. They're going to be opening one of their physical locations. Right now, there are third-party resellers that sell iPhones. The deal was Apple needed to build more devices in India in order to open up its own stores. And so that's what it's doing. They are also moving the manufacturing to India just because they want to avoid the issues that they ran into during COVID with China. It's a mixture of that and then the geopolitical tensions between China and the U.S. Apple just doesn't want to be caught up in that. China is where the vast majority of their devices are built. And if there's any kind of, back and forth or retaliation, Apple's a huge company. It could be, front and center. So they're trying to move more manufacturing overseas from China, whether that's India, whether that's Vietnam. And so they're doing that at this point. And we'll have to see how long that takes. But it could be some time before they manage to get even a 50-50 split between China and other countries.
And Dan, we know a lot of companies really jumping in on generative AI, but we've also seen some news just crossing. Is the U.S. Chamber of Commerce looking to crack down on AI?
Yeah, they want to see some kind of legislation to come along to kind of handle ChatGPT, generative AI, basically to regulate it and ensure that it doesn't damage other businesses and that it's safe to use. And this is something that, usually government entities or, entities like chambers of commerce, business groups, tend to not want regulations, but we're seeing that here just because it's such a new and I think powerful technology. Look, there's a difference between deep fakes, which obviously we've talked about being dangerous as far as political issues go, but with ChatGPT, this generative AI, It's a larger issue when it comes to businesses as well. That's because you can take someone else's content and kind of reconfigure it and then put it out as your own via ChatGPT. So, there's also the inaccuracy problems, things along those lines. And I think that's why we're starting to see this kind of reaction. Although that doesn't mean that businesses aren't already moving to put it into action on their own platforms. And look, we're going to continue to see that moving forward as the AI space continues to really heat up. This is, by the way, just one piece of AI. There's still numerous other versions of AI that are out there. So you can imagine if this one slice is getting this much attention, imagine when we start to see the other ones really mature, how that's going to explode.
Definitely. And seeing regulators trying to at least try and get out ahead of it as they see how much momentum we've seen ChatGPT and other generative AI technologies come to the forefront. A big thank you there to our very own Dan Howley.